The Fed has created zombies. But what does that have to do with Tesla stock? Will the Fed's actions punish Tesla for being great? I'll answer those questions and more for you right now. Welcome back, everyone. In this video, we will cover what did the Fed do? What does this have to do with Tesla? How this could punish Tesla stock? And if you like making money and want to do so with the cool kids of today, not the fake Instagram ones with fake stacks of money and other ridiculous stuff like that, go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and hit the like button as well. I'm gonna stuff $50,000 in my pants. Just ridiculous. What did the Fed just do? The Fed is buying junk bonds. They are now going to help bad companies. In the end, that is exactly what a junk bond is. It's a debt from a bad company and most likely won't be paid back.
But never fear, the Fed is here.
And they have effectively allowed and created new zombie companies. What is a zombie company, you may ask? Well, a zombie is a, dead person that's alive, but they're really dead, but they're kind of alive in a way, undead, kind of like that. But in business terms, zombie companies are businesses that make just enough money to continue operating and barely service their debt. They have no excess capital to spur growth and are considered close to insolvency or just, going bankrupt, going under, close to death. Zombie companies are considered super high-risk investments, and they are not for the faint-hearted. I'd recommend you guys stay far, far away from them. So no matter how you look at it, it's not considered desirable by any stretch of the imagination. Who would want to invest in these companies? Apparently, no one except for the Fed. So notice a couple things here. First, the Fed is highly specific about what they want to buy. Basically, I doubt that they're going to look at anything small. Second, they'll say they'll buy things subject to a reasonable price. What does reasonable price mean? Is the Fed going bargain hunting or something? I think that's completely unlikely. Right now, the goal is to inject money, not save it. So what would be a reasonable price? What does that mean in this market? What is a reasonable market price? In this case, there is no reasonable market price in this situation because there is no market. A marketplace price would actually be what actual investors are willing to pay. When you got somebody with an unlimited checkbook and they can just write big checks forever and ever and ever, it's no longer really truly a market. So what this basically means is there is no consequences for poor actions of companies. Officially, the Fed is doing this all because it needs to help keep capital markets flowing and banks functional. But the fact is, the Fed is actually saving over-leveraged, terrible companies from the consequences of their poor decisions. The better move would be to just let these companies go bankrupt. We have courts that can take care of all this for us. They can divvy up the liabilities and come to a fair agreement for everyone in this scenario. And there's even ways to do this without laying off the workers. It happens all the time. Bankruptcies are not new. I believe I saw something the other day. Was there 1,600 companies a week or a day or something like that go bankrupt every day or every week? So it's not uncommon. But it's not happening. They don't want these large companies to go down to zero and basically not only bankrupt the companies, but also bankrupt the shareholders. Financial markets just don't work when there are no consequences for bad behavior. We talked about it last time with a rich kid. Rich kid does something stupid. Mom and dad take care of it for him. Rich kid continues to do something stupid and the cycle just continues. It kind of looks kind of neat. Now, of course, nobody knew the illness was coming, but business cycles aren't new. And managers should be planning way ahead for these bad times because, the bad times always come. So now, after the Fed's done doing all this, we're going to have even more zombie companies standing in the way of progress. Usually zombie companies are cleared out and better companies move in and they actually produce better products, pay their people better, and are overall, better members of society. They provide society some value. Now the better companies are actually hindered and sometimes even put at a disadvantage compared to the zombie companies. Essentially, they're being punished for being good. Now this scheme is probably going to benefit some people, but one thing I know for sure, it's not going to benefit Tesla. And the way these programs are structured, the Fed hasn't brought in the stock market yet directly, but I do think they will bring in the stock market at some point in time if this downturn continues. And of course, the Fed just might have to like and subscribe to my channel as well. Provide me support since my last video didn't do so good. Or we can all just like this video and avoid the Fed altogether. So what does this have to do with Tesla stock? I see you guys over there saying, who cares? Doesn't affect my investments any. Tesla is not a zombie company, nor are they in junk bond territory. They're not even on the Fed's radar, so who cares? If you think this has no effect on your Tesla stock, you are sorely mistaken. And you could fall into the same lull that the other companies did with Tesla as it rose up. You know, dismissing their ability to be a viable company until, well, Tesla was, and we're actually ended up being way ahead of everybody else. So let's break this down a little bit. Who are Tesla's main competitors in the US right now? Ford and GM, right? Guess whose bonds have a junk bond rating and fall within the program? You've guessed it. Ford is already considered a junk bond, and it's widely assumed that GM is getting ready to get downgraded into the junk bond status soon. That was really hard to say. But you still may ask, so what? They're actually already behind so much, who cares what the Fed does with them? Let's analyze it from a little bit of a different perspective and look a little bit deeper. Stick with me here. It's gonna make sense at the end, and I'm gonna tie it all together nice and pretty. All right, so as of today, right now, if Elon Musk jumped ship over to Ford and his mission was to revitalize, revolutionize, and turn around Ford. Yeah, I know, fat chance here. Just follow the example. But let's pretend like he did. What is the biggest hurdle he needs to clear to turn them around? Now I'm talking big picture here. I don't mean list out the 5,000 things that need to happen. Just big picture here. What are we looking at? To put it a different way, what does he need in order to transform the business? He has all those legacy cars and factories and contracts and networks and all that other good stuff like that. But what does he need to clear the deck and start new? Or even if he makes the decision to leave those there for now, but start up something new down in, Texas, for example, what does he need? It takes money, and billions of dollars worth of money. But right now, Ford is losing billions. So how does he get the billions of dollars needed to transform the company if it's not profitable? And even if they were profitable, they still don't make enough money needed to transform the company. So for now, what they would do, like every company does whenever they need money, they would raise money through a bond offering. But since theirs are junk status to begin with, they have to offer extremely high rates. And additionally, there's only so much appetite for those bonds. They can't issue them limitlessly. There's only so many people who want to buy Ford junk bonds. So there just isn't a demand there to raise enough money. But now the Fed is there, and they're telling you, hey, we'll buy your bonds. And oh, by the way, we'll price them for you too. So what would Elon do? He'd issue out more bonds, of course, since you have a buyer right there who says, my buying power is completely unlimited. And if you don't think Ford doesn't have friends in Washington with a keen interest in helping them, then you have no idea how politics really works at that level. I don't want to talk about politics, so don't comment down below. I'm just saying they have lots of friends on both sides of the aisle and they would get the help that they needed. That's all I'm saying. Normally, they would have to pay huge interest rates to loan out that kind of money. But now the Fed is buying and giving a, value that they determine. Do you think they're going to give a favorable rate to Ford or to themselves? Especially with powerful friends? Long term, it's even possible the Fed forgives some of these things, or they roll it into some other program, call it something else, and that's kind of the same net outcome. They kind of don't have to pay it back, or they pay it back under such ridiculously good terms that it really benefits the company. But even if that doesn't happen and they still got to pay it back like normal, now Ford is flush with cash, which it can use to aggressively go after the EV market and the EV tech that they need to catch up on. Money that they simply could not afford to invest before, nor could they raise the amount of money they needed, now has just been gifted to them, and with very favorable terms. Do they immediately start competing with Tesla? Of course not. Do they have a small chance now as opposed to the zero chance they had prior to this program? Absolutely. So you're telling me there's a chance. Ooh, and I wonder why I don't have a girlfriend. So how does this affect Tesla stock? This potentially has huge short-term and long-term implications for Tesla stock. Short-term, what if the Fed does roll stocks into the program? Right now, the Fed is indirectly buying stocks. But what if they actually start buying the stocks directly? Do you think they are more likely to buy Ford, GM, or Tesla? Remember, they aren't buying to make money like you and I. They are buying to make shareholders whole due to the shock to the system that we've just had with all this illness stuff. That has been one of the key reasons they have stated why they're doing all this from the start. So that pretty much eliminates Tesla from the start since it's trading so rich. But Ford and GM sure do fit the bill. So if the Fed is truly buying Ford and GM, where do you think the institutional money will flow in the short term? Not to Tesla. I know I would take out some of my cash right now and pour it into whatever the Fed buys. They're like the old school cheat codes on Nintendo, you know, where you could go through and you couldn't die and you couldn't be touched and you could just run through the whole game and finish the entire game. That's what the Fed is to investors when they start buying individual stocks. I was the type guy, I didn't like doing that because beating the game on my own was one of those big accomplishments. And it was a huge personal satisfaction to actually do it. And, you know, bragging rights with your friends and all that sort of stuff. But if there was $1 million on the other end of this, and you could use a cheat code to get it, we all take the cheat code, right? Remember, when you're talking about investments, you're talking about risk versus reward. And if you can have a huge reward with virtually no risk, then you are just kind of stupid to not take it. Short term, that will put a little bit of damper on Tesla stock's price. But how does it affect Tesla stock long term? Look, a huge component of Tesla's high valuation is its future awesomeness, right? But virtually every one of those big predictions where Tesla skyrockets through the roof consists of Tesla really having no large competition in the EV field, and coincided with the general phasing out of the traditional automakers who previously could not compete with EVs. And in some cases, those automakers were basically conceding the EV war to Tesla. They weren't even gonna bother. Can you imagine the hype train if suddenly, due to a capital influx, a monster one from the Fed, 2 years from now, Ford has a decent competitive model on the road? That would be ridiculous. I'd be sick of all the articles. So if Ford can now just put a dent in the projections for Tesla, it would really hurt Tesla's stock price as it's being valued based on it really having no equal or any real competition. Whoa, slow down. Don't run to the comments, slow down. I agree. Even after all this, Ford cannot be equal to Tesla. I agree. Not saying they are. But it doesn't have to be an equal in order for it to have a larger share of the EV market than expected. And if they have a little bit of a larger share, that does make them a viable competitor. Not saying they're better, just saying it gives them a chance to compete. Remember, it's not an all or nothing game. It's not Tesla lives or Ford dies. Prior to this policy coming into play, you're right, Tesla may have been able to kill off Ford and GM, at least as we know them. Now that Ford and GM may become zombie companies, they can live indefinitely and may take a bite or two out of Tesla. So the next thing you need to do is click this video right here for more details on why I see a stock market crash coming. Thanks.